happy Halloween on With Sonar. I guess technically it's the day after Halloween, but hey, we're here having a good time. Ate my fill of candy yesterday. Also, it dropped. It's like 8 degrees outside, and Calvin. And I've got my FreightWaves, my fleece here. It's great. Very, very cozy.
Did you just use Kelvin?
Yeah.
I haven't heard that since freshman chemistry in college.
Yeah.
Do you even know what it is?
All I know is that it's colder if you have a low number. It doesn't go negative. It's like goes to 0, right? So Kelvin,
I don't remember.
Listen. Okay. The point I was trying to make is it's cold outside, and I needed my FreightWaves fleece. All right, that's all you need to know. Now it was so funny story about Halloween. Okay, so we actually have real stuff to talk about too. Okay, we are going to talk about the real stuff. We're going to talk about how volumes are going down.
Yeah,
which you called last week.
Correct.
Truckload volumes. However, intermodal volumes are shooting up and to the right, looking like Bitcoin. Let's go. And then, but intermodal contract rates are headed down. So we're going to talk about all that. So stay tuned. So if you want to know about truckload volumes, you want to know about when the market's going to flip, you want to know about intermodal demand and intermodal contract rates, stay tuned. Okay. Now, funny story about Halloween. So we had Halloween yesterday. Got my son he wanted to try some candy. So you know those Warheads?
The super sour?
Super sour ones? Now he's 5, right?
The first thing you gave him.
So I had a bad dad moment, all right? But also it was very entertaining. So I gave him one. He didn't know what it was. I said, yeah, here, try this. I did tell him it was, first of all, I told him it was sour. There was a disclaimer. But it's, he didn't like it.
Shocking.
So I think kind of in an effort to repent, I'm going to have to take one here on the show. You want one too? I got one for you. Here, you take that one. I'll take this one.
I'd rather not do this.
You should do this. And then we're going to talk about the truckload volume. We got also, speaking of which, before we get there though, very special. Next week, we have F3. It's here. It's only 1 week away. Future of Freight Festival.
And we got 2 shows.
We have 2 shows.
Yeah.
2 shows next week at F3.
Tuesday and Wednesday.
Also, I'm not a music guy, and I realized that for one of the shows that we have is so there's a concert. The JB Hunt Party is the concert, I think the first night, right? November 7th. And T.I., he's a rapper. Yeah. He's the headlining performer. I didn't know who he was. I started listening to some of his songs. I know them all.
Yeah.
I just didn't realize it was him. But that's going to be exciting.
It's going to be a fun time. If you haven't gotten your tickets, go ahead and do it because the event itself is going to be awesome. I mean, a Brad Jacobs town hall. If you want to learn how to make a few $1 billion, there's no better place to learn that from somebody who's
100%
made a career out of M&A and
if you don't know who Brad Jacobs is, CEO of XPO.
No,
or she's
chairman, executive chairman,
former CEO. Speaking of which, XPO just reported earnings not long ago. I'm going to eat this warhead while you tell us about those earnings.
Yeah, I mean, they're strong, I think there's no other way to put it. I mean, and their stock market, the stock benefited greatly from it. I mean, it was up, I think 15% after reporting. So pretty strong. And what's interesting about that one is that RXO and GXO, so the 2 companies that were spun off of, benefited in a way that it's just like a momentum thing that in the same day, XPO reports and you see a 15% increase in their stock price. RXO followed with like a 4% increase on no news, but it's just one of those, there's by association to some extent. So
now tell me the difference, right? XPO is North America.
XPO is LTL.
LTL.
RXO is the brokerage. And GXO is like the managed transportation, warehousing, logistics side.
And they all used to be one, but was it 2 years ago they split them off?
Well, I forgot exactly when it was. I think it was sometime last year.
Okay.
It was announced maybe 2 years ago, but it finalized last year.
Do you have your warhead yet? It's really sour.
Yeah, it is.
Yeah.
Yeah, they're not fun. I don't know why you enjoy that. And why you wanted to be mean to your son.
Wasn't mean. He spit it out. I gave him some water. It's all good. All right. Now, okay, so XPO, very good earnings, but that kind of a little bit different, right? LTL market we know has been doing well. It's been healthy.
Yeah.
Or certainly healthier.
Truckload market's not that way.
Truckload market's not that way. Intermodal market, kind of, sort of, but not really.
It is, to the extent you just have to remember as
It's a different beast.
Yeah, it is, right? You've got the railroads own intermodal containers. You have intermodal marketing companies like J.B. Hunt, Schneider, Knight Swift has a sizable container fleet.
Hub Group too, right?
Hub Group. Yeah, I mean, the big two really that predominantly play in the intermodal space are J.B. Hunt and Hub Group.
Right.
And then Schneider and Knight Swift just have sizable intermodal.
They're building
too.
Especially Knight Swift.
Yeah, I mean, Knight Swift's, you think about their intermodal fleet or container fleet. I mean, it's up over 12,000 containers. If it was something where like
strong.
Yeah, I mean, I did the numbers. You've just seen growth across the board. Let me try to find it while we're sitting here talking. But I mean, it's one of those, they've focused on, it's an area for them to continue to expand. And I think that's the key, is this diversification away from the truckload business that they ultimately are really good at. But you have to look at what they're also trying to do, right? I mean, they're expanding into LTL with their acquisitions. They still have a logistics arm. They're obviously active in the truckload M&A space with the purchase of US Express earlier this year. So, I mean,
so far has proved to be pretty positive.
Yeah. So you're seeing positive signs. I mean, you look, growth since the first quarter of 2018, Knight Swift's intermodal fleet's grown by 38.9%. It's grown almost 5% year over year in the third quarter.
Right.
JB Hunt's is up almost 4% year over year and up 32% since Q1 of 2018. So you can see that these intermodal companies have made investments in their trailing equipment. So you're seeing more containers available as a whole. The kicker, why we didn't see the growth, maybe it's more stable growth, right? Kind of mid-single digits in terms of like actual year-over-year growth. The kicker, what you don't see, or why you didn't maybe see that growth back in 2018, or not 2018, 2020, 2021, service issues at the rails, and those have improved. So with those improving, it allows a alternative for shippers that lowers their carbon footprint because it's the most fuel efficient way to move freight over long distance. With higher fuel prices, their base for their fuel surcharge is actually lower than what it is on a truckload. So you actually can save money on
line haul is still about 10% cheaper.
Yeah, it's about 10%. And ideally, they want it in the 15% range, but you might be saving that excess through fuel, right?
But if you don't need your goods there at a expedited time, who cares?
Exactly. I mean, I think that's a perfect way to put it. Like, why not? I think that's some of what we've heard internally is that the retailers are more willing to. And not just retailers. I mean, shippers as a whole are willing, if they haven't used it before, they're willing to at least sit down at the table and hear the value prop, right? And that's something that's changed. And you would think right now, given how the truckload market is, like you wouldn't necessarily see that change or the willingness to sit at the table and listen. But they're looking the ESG and zero carbon or reducing their carbon footprint become increasingly more important. So they want to find the most fuel efficient. They don't want to have to take hold of this inventory. I think it's another big player because, I mean, you talk a cross-country move that in a truck gets done in 4 days, intermodal's a week. So, I mean, it saves you a couple days on the back end that you're not holding the inventory in a warehouse. So, I mean, there's definitely benefits. It's a smaller market overall than the truckload market. But also, if you have a lot of freight to move, it's a lot easier to add 30 containers to a train than it is to add 30 truckloads. So there's that drivers, right? So yeah, so it's not just you can add. I don't say it's easy to add, but I mean you work with your intermodal marketing company is going to work with the railroad to figure
different
out
problems,
how to do
different
it.
solutions.
Yeah,
for sure. All right, let's dive into some sonar here so we can get some updates. So I want to talk about truckload volumes too before we forget because this is something you had called last week. There it is. Take a look at that. So dark blue shaded line that goes about 80% over to the right. That's year-to-date truckload volume. Now, Tony, you were telling people to keep an eye on this. Hold on, we got a blank screen. There it is. So you were telling people to keep an eye on this because if it starts to fall the way that we saw last year, and even in 2019, again, we're throwing out 2020, 2021. Those were too crazy. And it looks like it's having a little bit of a decline. Not huge, but it looks like we had a little bit of a stair step down this week.
Yeah, and it's pretty normal, right? There's not, 2019, you saw a little bit of a bump in volumes into the end of the month, but they had fallen and just basically recovered. We're in arguably almost, if you overlaid it and took like the average throughout, or where we were to begin 2019 and the down, it's pretty close to the decline we saw this year. The difference is we're a little higher, which we should be because you should see volume growth over the period of 4 years, 5 years, right?
We're 10% higher.
Now, the question is, do we inflect positive? And I will say, I think yes.
I think we're going to stay above 2022 levels.
I think we're going to pass 2022 levels, and I only say that because even if we decline slightly from here, the drop at the beginning of November in 2022 was so drastic and so large that it kind of overran where we were. We may see a decline. So we may cross over it for a very short period and then fall back under it. Because if we follow a very similar trend line to 2018, which again, we're kind of on, we'll see a dip in early November before ramping up kind of in the middle of the month into that peak season. Now, the caveat is this year's Thanksgiving's fairly early, right? You have almost a full
23rd, I think.
Yes. So it's fairly early in comparison to the past couple of years. Because if you look, we're running in the effects of the 7-day average are rolling into December. It's not going to really happen this year, right? They're kind of. So I think that's something to pay attention to, that still look around the 15th of the month, but that's about 1 week prior to Thanksgiving. That would be the Wednesday before Thanksgiving. So we may cross over it for a very brief time during the next couple of days in terms of volume, but it wouldn't surprise me if we're back negative by this time next week, or say the following week, not this upcoming weekend, but the weekend after.
Well, you gotta be a pessimist, Tony. It looks good, all right. It looks good. Everything's fine. Everything's fine.
The good news is that we didn't decline further in October,
that's true.
Right?
No, I'm with you. Honestly, it looks like we might stay above. The question is, do we stay above, or do we fall back below? So that'll be the question. By the way, speaking of Thanksgiving, do you know what a turducken is?
I do.
I just learned what a turducken is.
Really?
I did, and it sounds pretty good.
A turkey with a chicken.
A deboned turkey, and then you put a deboned chicken inside of that, and then inside of that, you put a deboned duck.
Yeah.
That sounds fabulous. So you get all the fat from the duck to basically moisturize
turkey, which can get very dry very quickly.
Can get dry, so it doesn't dry out the turkey, and you get all the deliciousness. I've never had one before. I'm thinking about it, so yeah. All right, back to this. So now what we got to talk about, so that's volume. So a little bit of a decline in volume. Nothing to write home about. Just kind of looks like we're following some of the trends from previous years. Let's go ahead and throw up the spread now between contract rates and spot rates. This is the spread line haul, okay? And it looks like both contract and spot have seen a tiny little bump, tiny being the underlined word. Again, really just kind of bouncing in this range that they've been in pretty much since August. Honestly, at this point, probably close to like May.
Yeah, I did the math just a minute ago. So the third quarter average for the contract rate was 237. And October to date, remember, we've got a 2-week lag on contract rates. So the first, call it 2 weeks of the month was 236. So, we're talking effectively flat from the third quarter average.
Yeah.
So, you really haven't seen a ton of movement in contract rates. Spot rates, obviously more volatile, but we flirted with the lows that we saw back in May that we didn't think we were going to hit again. Now, if you include fuel, not necessarily the case. We haven't flirted really with those levels. We've stayed kind of in this range, But that's because fuel's
We
been
were
elevated.
only like 2 or 3 cents per mile off. I think, what was the low? 167?
7, I think.
And I think we got to did we get to 171?
I think so.
I think it's what it was. So about 3 cents a mile. So yeah, we got dangerously close
Mm-hmm.
to your point. But basically, like right now, we're right where
We were in April,
we were in April. After the drop in April, that's where we were.
which is a concern, which to me would signal a concern heading into the fourth quarter. And I only say that because I say into the fourth quarter, into the peak, right? Because you're going to start at a lower baseline. The lower the baseline you start, the more you have to push up rates to get them to a level you feel favorable, right? Like
Right.
it has to move a lot further. And I think that's the concern, is that we're going to start this run up around the months at a lower base, which is a concern. And if you look at the NTIF, so the forecast for the next 28 days, I think it peaks out at like 233, and we're at
it's like a
225.
4% increase or something.
Yeah, I mean, it's like 6 or 7 cents a mile into Thanksgiving, which like last year that increase was like 10 cents. So you're seeing a muted increase projected for a holiday.
And while fuel rates are on the rise.
Well, we could talk about fuel for a long time because it's so volatile that
We're not going to, because we only have 9 minutes left.
the second you sit there and say that fuel rates are on the rise, volatility, rack prices
And then all of a sudden,
drop, and then we start.
and then rack is at like 99 cents a gallon, right?
Yeah, it would be nice. I guarantee you, anybody operating in the market might be. Well,
Wouldn't even need an increase in rates.
you'd have to have retail prices catch up, but
That's true.
so
But anybody in the rack world would be having.
they would
enjoy that.
They would be
week
rolling in money.
greatly. Okay, so I want to make a prediction here. Okay, I'm all about predictions. All right, I'll throw my hat into the ring. It's okay if I'm wrong. So rates have been so suppressed for so long, but carriers' costs are still on the rise, especially with insurance and other things. And I want to go to this next chart here real quick. Carrier details, which shows the net change in trucking authority. So whenever you see this chart as red, it means there's more carriers leaving the market compared to entering it, and showing you the difference. This is on a weekly basis. If it's green, there's a net gain in that number of carrier authorities for that week. Obviously, we know super green during the bull market, and it's been red. We're basically going to wipe out all of 2022's gains. Maybe by a little bit extra, by an extra 10%, maybe extra 15%. So we'll wipe out all of 2022.
What's interesting about that is we added 344 carriers per week, or authorities per week on average. And for the back half of the month, we were losing capacity every week. Like,
Yeah.
you still grew so much in the first quarter of the year.
Rates were still high, right? Because
They
nobody
didn't
was
really
watching that tender rejection.
Yeah, I mean, what was it? Craig Fuller's article came out March?
March 31st.
Yeah, and
22.
you saw
And
you
it took
saw the
another-
growth really
Took
slow down.
another 3 months for it to fall.
Yeah, and then so yes, we'll wipe
But
it out.
anyways-
But I think the interesting part was that we've been in this decline for 18 months, and we still haven't even.
Now, we don't need to get rid of all of the capacity because we
Demand
have
levels are
added
high.
volume. Demand is legitimately higher than 2019. So there is some of this growth that is going to stick around. But the prediction I want to make is we've kind of been stagnant, kind of bouncing in this level of carriers leaving the market. I think that's going to accelerate.
Yes.
And like if we stayed at this level, sometime in the next 13 to 15 months, it would balance out with demand. But I think it's going to be much less than that. I think we're going to see a big accelerant, if not at the end of this year, in Q1.
Yeah, I think
As kind of everybody's just like, I've been under pressure and underwater for so long with these lower rates. They haven't gone up. Nothing's bounced. My costs have only increased. And I think we're going to see a pretty big exit with a lot of these small carriers.
Yeah.
Some might try to lease on with a bigger carrier, but I've heard of a lot of big carriers that aren't even taking them right now.
Yeah, I mean, I looked at Landstar's BCO data because I think it's a good gauge of like changes in capacity.
Sure.
With, say, owner-operators leasing on with a larger, I mean, they are a freight brokerage, right? I mean, but they're leased on, so it's a little different than your traditional freight brokerage. But when you look at that number, typically when you see quarter-over-quarter declines. It's been fairly accurate in the past few cycles, calling both tops and bottoms, because you start to see changes quarter-over-quarter. In the second quarter, we started to see that quarter-over-quarter decrease in BCOs started to decline. And the idea behind that, these BCOs would go back and become company drivers or leave the industry altogether, right? Like they kind of had an option. So tracking that number, granted, it's quarterly, so it's not the most real time, but it does kind of paint this picture too that signals this. But it started to creep back up in the second quarter, kind of closer to zero. Well, third quarter came out, another drop. So it almost gave like this head fake that and now the weakness in Q3 caused more of these BCOs to leave. So someday it signals very similar to this. But you're seeing exits. It's just not at a rate that, and there's so much that has to leave to make this. I think that's the key. Is
like this number has to double for like 6 months.
It has to. I mean, when you think about it, and we did the math today on a carrier update on FreightWaves Now. Me and Donnie Gilbert were talking. From July 2020 through July 2022, we added, it was 1,200 new authorities a week on average. We're losing right at 400 since of 2023. We've been at 400 basically exit. You're losing 1/3 of what you added every week. It's not like it would take, the way he described it, over a 2-year span at that, and where we were currently at, he goes, it effectively takes 6 years to wash out all of it. That's not going to happen. No. I mean, they will leave well before then. But still, I mean, you're talking, I mean, Craig Fuller's put it out, and Zach Strickland talking about it was what, 76 months? I think was what it was. Was it weeks?
Yeah. So
76 weeks to shake out.
Yeah. About a year and a half.
Yeah. So, I mean, you start talking June of 2023, maybe at the earliest, or 2024 at the earliest. It's
2025.
Okay. Yeah. Year and a half from now.
Yeah. About a year and a half from now.
From now. So add in the net declines that we've had for over a year now. So add 52 weeks to that.
Yeah, I think we're going to see another big dip down there at the end of this year, like we always do.
Yeah, I mean,
even pre-COVID,
you see it in the growth numbers too, right?
The question is, will we stay down there, or do we bounce back up and continue the slow drip?
I think it has to accelerate. I don't think there's anything that's going to keep it. There's not like a demand surge on the horizon.
What I'm going to look at is what happens going into the week of Thanksgiving.
Yeah.
If that starts to accelerate downward, then I think it's going to be, we're going to accelerate.
Yeah, it'll be interesting for sure. So,
okay, last thing we're going to talk about. We don't have much time left here. Hey, did you eat your little sour thingies?
No.
See, folks, it's just, I'm out here trying to have fun, trying to entertain. Can't even get a little help here. All right, intermodal volumes. Last one. Intermodal volumes have hit, they hit all-time highs. Now, this is domestic intermodal volumes, which is 53 foots. Now, currently, this is all loaded and empties for those 53. So right now, yesterday, we shipped about 22,000 containers. We almost touched 22.5 thousand like a few days ago. So big run up, starting to curl down a little bit. These different colors here are the different subsequent years over the same period of time. So 2020 in orange, we got the closest to this level. But basically, yeah, at an all-time high. Tony, you and I were talking about this. There's a lot more empty containers that came into the market, so there are some a little bit more shifting that's happening. But I guess kind of from your perspective, like, what should we expect through the end of the year? Are we going to stay elevated, or are we going to come back down?
Well, I mean, this is the typical peak, right, for intermodal volume, just given the timing of it. I think one of the interesting things is over the past year, intermodal volume's up, I think, 6% domestic loaded volumes versus our long haul outbound tender volume index, which is a measure of tenders over 800 miles in length or in transit. When you think about that, one's up 6%, one's up 1%. it just shows that there's been growth in the intermodal market,
Yeah.
taking market share from the truckload market, which is interesting and to some extent makes sense. I think one of the interesting things is like look at Los Angeles on their volumes. Domestic intermodal volumes are up like 9%, or I think it was 9%, and long haul outbound volumes out of LA in the last year, I think they're down a couple percent. So it just kind of, it's just a good way to compare data sets that measure competitive things. They're not equal, but they do compete with each other.
Yeah.
But I don't know if we'll stay at this level, but I do think we'll be elevated compared to previous years.
Yeah, it'll be interesting to see like what happens right after Thanksgiving, because in 2020, I mean, that looks like typically the peak of the peak if things maintain. So I think it'll be interesting to see. That'll be if we are above where we are now after Thanksgiving, that'll be a bullish indicator, I think, for intermodal. But anyways, folks, it's been a great episode. We'll see you next week live on With Sonar. In the meantime, have a great day.